Welcome to the Daily Update. This is being prepared Tuesday, May 3rd, where we'll look at the action in the market today and then see how things look for Wednesday, May 4th. And this is the big day that we've been waiting for. The FOMC will make their announcement. Before I get into today's update, I want to just share a brief announcement with what I'm doing with my blog. What you see right here is spxinvestingblog.com. I run this in addition to my website, spxinvesting.com, which is offline right now. But what I wanted to start doing is not only do you have access to the videos, I want to make the charts available to you. So if you go to spxinvestingblog.com, this is what you'll see. And even though there's a login and all this, I don't have things really locked down all that much right now. I just wanted to get this to work because this is a WordPress site and you try to do one thing and 4 problems are created. But if you just see the menu going across the top where it goes down to more, just click on charts. And if this loads somewhat quickly, there'll just be 2 links right here. What I do is each day, the charts that I use for the most recent video will be available here. So you just click on that. And hopefully this loads. And just click on the very first one. And then this just takes you through all of the different charts that I use, slides and charts, and you can just look at them either while you're watching this video. You can go back and look. The one drawback that I'm having with this is when you get to the bottom of the list, because there's hundreds of charts on here, these are the only ones that I use in the video. But when you get to the very last chart, and it doesn't go to the next page for you. So you have to click the next page and then go look at those charts as well. You'll also notice over on the right hand side I have some articles that are posted that are getting more and more out of date with each passing day. Then if you scroll down, I also post a lot more charts, and these are the charts that I don't use in the video, but I look at them every day. And you can go through and look at these as you have time. The goal number 1 is to help you learn more about technical analysis and how I study the markets. The other thing is just to see if you see something that perhaps I missed. And we can talk about that because I look at all of these charts and I'm going through them pretty quickly. And so, yeah, there are times when I don't see something. But this is the basic structure. First, you'll have the videos for this latest video, and then down below the ones that I don't use. Now, if you go back up here to more and back to that charts page again, what I do also, and this is also available on the day that I post the slides here, is I have an archive that's a PDF. So, for example, you can click this, and this will open up a PDF of all the slides that I used. Now, I don't use the slides that are not in the video. I would have to enter those in one at a time, where this is a PowerPoint presentation and I can just save this as a PDF, where with all those extra files I would have to enter all of them into Adobe Acrobat one at a time, and I don't want to spend 3 hours doing that. Until I can find a more streamlined way of doing that, only the charts that I use will be available as a PDF. And then there'll be an archive here as well. And you can not only click this to open, which makes sense, but you can also right click and do a save as if you would like as well. So whatever works best for you is what I'm trying to do. And if you have any additional things that you'd like to see, yeah, I know you want to know if the market's going to go up or down tomorrow with absolute certainty. Well, I can't promise that to you. But as far as the information that I try to give you and the way that I try to give it to you, if you have any ideas, please let me know about that. Now, getting back to the daily video update. Let's go back over what happened on Tuesday. And also, I've repositioned my microphone to hopefully get a better sound from the recording. But it's in between myself and what I use to advance the slides. And if I just even look at it, it makes a noise. So if you hear some bumps and thuds, I'm trying to do some things to take care of that. But again, my mission right now is to get these videos loaded as fast as possible for you to see them. But at the open, we did have a positive open. But there was little movement after that. We just kind of stayed going sideways right above the unchanged level. As the day went on, some buying took prices up to R1, which was at about 41.96. Then selling took us back down to the unchanged level. Going into the close, we saw some late day buying, which took us almost back to R1, and then we saw more selling. So it was more of a roller coaster day. Not really all that surprising with a day ahead of the FOMC announcement. We ended up being up 0.48%, which is kind of a novelty right now. We were up 0.57% yesterday, and to be up 0.48 today. We haven't had two back-to-back up days in quite a while, or so it seems that way. Volume was below average, and that should also not be a surprise. We've got a major shift in Fed policy coming out, not only with what they're going to do, but also with what they're going to say. And a lot of people are skittish ahead of that. What we're looking at, the technicals are still pretty negative, but we're bouncing from that short and even slightly intermediate term oversold condition. Inflation and interest rates, that's the story right now. The different geopolitical concerns are still there, and I'll mention those later. Companies are still coming out with earnings reports. Those can either help or hurt the market. Kind of the same scenario that we've been working with. As far as where we're at, the technicals are negative, but we are seeing some improvement right now after Monday's and Tuesday's advance. Growth was up, but underperformed value. That's interesting. We had an up day, but growth still did okay, but value did even better on Tuesday. Copper continues to fall, and I don't want to read too much into this right now, but it is falling out of a pretty tight range that it's been in for a while. The short-term oversold bounce, can we continue after this? And what's likely to happen is after we have the market open on Wednesday, we'll gyrate around like things do, and then we'll likely settle into some kind of a sideways pattern, typically with a little bit of an upward bias. And then the announcement comes out and the markets gyrate all over the place. Now, it could change. Last time we gapped lower and then went sideways and then skyrocketed up from there. So, but typically you have a lot of people that really don't want to commit to something until they have more factual information, and that could send the markets either way. And then also depending on what Chairman Powell says at the press conference afterwards. The S&P is still in correction territory. The 10 to the 5 is still inverted, which again, you may discount that, but it still is inverted, which is not normal. As far as the economic reports, and we're a little out of order here. Okay, I'm just going to have to go through this. Factory orders increased 2.2% month over month. They expected them to be up 1%, so that was quite a bit higher. Shipments of manufactured goods jumped 2.3% after seeing a 1.1% increase in February. And this supports the idea that the slowdown that we saw in February was mainly due to Omicron. And that's what people were blaming at the time. And now that's what they're using as justification for the February numbers that weren't very good. And now the March numbers are looking quite a bit better. The job openings also increased. And then as far as our trend condition, it's negative still. The bias is positive. We've had 2 up days in a row. The momentum is still mixed to negative overall. And we're kind of sitting on the fence right now to see how the market will gyrate after the FOMC adjourns their meeting. So the year-to-date performance, and I thought I went through and fixed these, but I'm just going to bring them all up. The Dow is down 8.8%. The S&P is down 12.4%. The small caps are down 15.4%, and the NASDAQ is down 19.7% right now. As far as the day session, I'm also including a few more charts. These are the end-of-day indexes that we can look at, just to show the transports, the mid-caps, the small caps, the value line. There's also a broad-based index. I don't use that as much. I used it more in the past. The Dow Composite, which I often show a chart, the Wilshire, the Dow Utilities, the S&P 100, the NASDAQ 100. These are indexes outside of the S&P 500 that we also want to keep an eye on. Then over here, we look not only at U.S. markets, but also a little bit internationally with the Dow, the NASDAQ, the NYSE, the S&P, of course, the Amex, which is in New York, and then the French, that's the CAC 40, the DAX composite, which is in Germany, the Euronext, which is part of the EU, TSX, which is part of Canada, and as well as the Venture composite. So that just gives us more of a world view of how things are going. But America is still the big leader when it comes to these things. Now let's look at sentiment. With the last couple of up days, we saw fear subside a bit. We're up into the fear category instead of we were bordering on going to extreme fear. And here's the historical chart just to see where we're at right now. Then we did have this, and usually it doesn't come out till later in the week, but all of a sudden I looked at this chart and the RIDEX bear to bull ratio had come out, and we spiked up a little bit. We're at 0.07, not necessarily extreme, but we are showing that people are more fearful. They're getting into more bearish mutual funds these days. The VIX declined on a closing basis as well as on the bar chart. And a lot of this I'm going to go through quickly because with this being a Fed day, it's like a lot of this just kind of flies out the window. We'll come back to more normalcy, but the markets are just going to do what they want to do, and then we'll kind of return back to being more sane, hopefully, over the next day or two. The VIX of the VIX also saw a decline. The Ulcer Index continues to go up. There's still fear in the markets according to this indicator that gauges fear. This is a long-term look at the Ulcer Index. And the put-call ratio, this is just for one day, just shows that we did decline slightly. And here's a 5-day moving average, which still shows us as being pretty high overall. Here are some of the ISabelNet charts. This one is the ISM Manufacturing Index against the S&P 500. This was one of the economic reports that came out. And it just charts this over a period of time. The orange line is the ISM, where the purple line is the S&P. And this is year over year. So this goes back quite a ways. So we can see on a longer term basis, these two tend to move with each other. So that's one economic report we want to keep an eye on. Also, we have global equities that are countries that are making new 52-week highs. That's a sign of strength. Where we have the, I call it the All Stocks ETF. It's the MSCIACWI. Yeah, there we go. This just measures all of the different stocks. This is not the S&P 500 that you see in the black on the chart. And then as we're making new 52-week highs, this red line goes up. Well, right now, we're hitting kind of a bottom. And we could use this as a potential contrarian indicator, not only with the U.S., but worldwide as well. Bloomberg posted something here about the earnings per share estimate. And they're still saying that we should be going up from here. And that's ultimately what drives stock prices. You've got to have the earnings behind the current value of the shares, or they're going to go down. Another one, this looks at value versus growth as the 10-year yield rises. And you can see when the 10-year yield is declining, that's when we're seeing value underperform growth. And this is using the Russell 2000, which is the small cap index. Well, in 2020 and after the COVID plunge, we saw interest rates really start to go up, and value inside of the small caps also started to go up. So just something else that's a little interesting to look at. Here is investor margin accounts. It's a outfit called FINRA. It's finra.org, and it just measures the more debt that people get into to buy stocks. That's usually when the markets are going up. When the markets are going down, people get rid of those either because they're losing or because they get a margin call, or they suddenly realize that margin can be dangerous and your losses mount pretty quickly. And so as the market goes down, margin debt balances go down also. And this is also part of the current market valuation index that we look at to get some kind of an idea where we're valued right now. This is what I wanted to talk about with copper. And it's not necessarily surprising. We've been at this level before. But the last few days has really seen copper prices dropping, even though it was up 0.35%. As far as the sectors, most of them were positive. The energy sector did the best, followed by financials and real estate and materials. Those that did the worst are the usual suspects: staples, discretionary. Tech was up just a little bit. And here's the performance year to date. I feel like a broken record when I go through this, but it does change a little bit from time to time. Fedwatch, we are looking at a 96.8% probability that after the meeting at 2 p.m. on Wednesday, the Fed will come out and interest rates will be at 0.75% to 1%. And here's the historical chart leading up to that. Looking out to the June 15th meeting, a 90% chance that we'll be at 1.5 to 1.75. And then the July 27th meeting, a 78% chance that we'll be at 2 to 2.25 after that meeting. So this is a tightening interest rate environment if things keep going the way this predicts they will go. Technical alerts, some positive, some negative. The Dow is not on here. It crossed below 33,000 at one point, but the NASDAQ went below 12.5 at one point. And if you hear me bumping on the microphone, I don't hear anything. I don't notice this until I actually go through and listen to this. But if I just breeze up against it, it seems to sound like a megaton explosion. Healthcare is also looking a little more positive. Energy is seeing a little bit of a bounce. The NASDAQ got above 12.6. TSX, that's Canada, it got back above 21,000, and oil went below 105. Intraday, over on the right-hand side, we had a positive open, and then we just danced along the unchanged level. We did get up to R1. We fell back a little bit, tried to go up to R1 again. Didn't want to take things any higher, so then we fell down almost to the unchanged level. In fact, at one point we did get back to unchanged, bounced a little bit off of that, saw some selling going into the close, and it was a real choppy sideways day overall. We're still above that long-term support, and that's a really good sign that we were able to hold that. And volume was below average. We're down 12.95% currently. As far as the technicals, those things that are outperforming, this really hasn't changed since yesterday. Value is outperforming growth. Growth is outperforming bonds. Interest rates are outperforming tech and the S&P. The low volatile stocks, which are more value oriented, they are outperforming the S&P. Energy is outperforming the S&P as well as the SPY. Energy is outperforming tech. Energy is outperforming everything. The CRB, commodities, they are outperforming the S&P. Gold is outperforming the S&P. Staples are outperforming discretionary. And junk bonds are on a price basis are outperforming treasury bonds, even though junk bonds are in a downtrend. Then those things that are positive: energy, the CRB, gold, interest rates, staples. Underperforming. NASDAQ 100 is underperforming the S&P 500, so growth is underperforming more value. The S&P 500 is underperforming 10-year yields. Growth is underperforming value. Tech is underperforming interest rates and the S&P. The S&P is underperforming the CRB, just the opposite of what I said on the previous slide. The S&P 100 is underperforming the S&P 500. Discretionary is underperforming staples. So let's go through and look at some of the negatives. The Dow Jones Composite is still negative. World indexes continue to decline. Junk bonds are outperforming treasury bonds, which junk bonds are negative. The FANG index, it was up a bit, but it's still in a downtrend. Small caps, the Dow, mid caps, NASDAQ 100, NYSE, all stocks, ARK, Bitcoin, all of these are in a downtrend right now. Wilshire, world indexes, corporate bond prices, not yields, but prices. All of these are in a downtrend right now. Now, I thought I'd kind of rework this. I'm trying to color coordinate this chart. I had some good feedback on this chart. These are just the negative indicators. And looking at all time frames, we're below all the moving averages, and the moving averages are declining. The advanced decline studies are declining, but showing some improvement. And the different charts, the KEGI, the Renko, the 3-line break, they're negative, but also showing some improvement. Short term, and when it's red like this, that's after we've been given an oversold signal. So the 20 went oversold and is now bouncing back up out of that. The force index continues to be negative. That's what white is. The Stochc RSI, that's blue. That's the new color for today. That's when we're negative but improving. So it's bouncing up a little bit, but it's still negative overall. And the Williams percent R also generated an oversold signal. Intermediate term, this is the long list, and this is where you get some weird colors going on here, where the rate of change based on the 10 and the 20 is negative and going down. The 50 is negative but improving, and the 200 is negative but improving. The PMO based on price and volume, they're both declining. And then this should have come up a little different. I have to rearrange the animations here. The PMOs, with those that are rising inside the S&P, they're bouncing up after giving an oversold reading. Those that are giving buy signals continue to advance and are extreme negative. The PMOs that are above zero, momentum indicators, and the parabolic SAR continue to be negative. The stochastics, the short term is bouncing, but the intermediate term and long term are still extreme negative. And this is all messed up a little bit here. The 50-period moving average is extreme negative, but it's trying to bounce up a little bit, where the 150 and the 200 continue to go lower. The new highs, new lows are declining. The Sean trend meter, that should be CTM, not CMT. The bullish percent index, those continue to be negative. The CCI, based on 14 periods, gave us a signal, where based on 20 periods, it's still extreme negative. The Chaikin money flow, ease of movement, and money flow index, those continue to be declining. The ultimate oscillator, it's bouncing up a little bit, but it's still negative. The vortex, the summation index, and I'm even chopping off the bottom here. I'm going to have to rework this slide. Sorry about this, folks. I'll rework this by the time I post the slides. And the accumulation distribution, the itchy cloud, those continue to be negative. The boom indicator is extreme negative, where the 200 is declining. The percent B, and then I can't see that bottom one there. I hope there's not a lot left. And then longer term, the special K, rate of change 200, and the long-term trend, those continue to decline. We've got a big old list here of negative things. What are those things that are positive? The STO continues to advance, the Chaikin oscillator is going up, and the rate of change based on 5 periods is advancing. The positive setups, these are the things that might come into play at some point. We're looking at the Copic curve at giving us some kind of a signal. It hasn't yet. The mass index, same thing, has not generated a signal yet. The Pring bottom fisher. The small cap ratio to the S&P could give us a thrust, but we're not seeing small caps really burst up yet. The positive backdrop after we get out of being in an inverted yield curve, we're still waiting to see if that will happen. As far as our trend, we are negative. The dark line is declining above the moving average, and the red line is on top. The Arun continues to be negative with sellers at the top. That means they're in control, and we're seeing a decrease in buyers. When you compare the two, the oscillator down below is negative and declining. Intermediate term, no change. Everything is pretty much negative to neutral as far as decision point is concerned. Here's the rate of change, extreme negative for 10 periods, 20 periods extreme, 50 periods bouncing slightly. The 250, it's just slightly negative. It's really hard to see, and this goes way back a long time, but it's just slightly negative. The Fibonacci retracement, we're back to about the 61.8% retracement level. We're just a little bit above that right now. The standard deviation, it actually fell a little bit, but is still kind of high. Overall, stochastics, short term bouncing, intermediate term still extreme, long term negative and extreme. Sean Trend Meter is giving us an extreme negative reading. The STO is negative but showing some improvement. That's why it's one of the lonely things on the positive side right now. The PMO is declining. Any way you measure it, the PMO studies, we're bouncing slightly with our PMOs that are rising. The buy signals are extreme negative, and those that are above zero continue to decline. Here's the other lonely Hearts Club indicator. The Chaikin Oscillator is showing some improvement. The boom indicator is extreme negative, and that's the top one based on 50 periods. The 200, we still have a long ways to go with that one. The Elder Impulse, based on the S&P, is still neutral, both with the S&P and with the spiders. The Parabolic SAR continues to be negative with the dots above. Long term, we're below the long-term moving average. The Special K continues to decline. Broad market, we are neutral with the diamonds, and we're neutral with the Qs. Broad market, the dollar was down about 0.25%, but still doing well. It's at 103.5. Oil fell down to the 102.41 level. As far as bonds just are falling off a cliff right now. They are very oversold. Here's the 10 to the 5 yield curve, where we're just slightly negative at minus 0.04. Treasury yields actually fell a little bit, but we saw a bit of an advance in the 2-year and in the 3-month. World yields, where I'm looking at the red line mostly for Japan, just to keep an eye on that these days. Then here's the Japanese yen, which has been declining. The euro been declining. The dollar has been doing quite well. Our different scenarios, the Copic curve, no signal is generated yet. Mass index, no signal yet. Bottom Fisher, no signal yet. The staples to the S&P ratio, have we topped out here? We're actually a little bit below the moving average. That's why I have a little circle around that. We want to keep an eye on this. This could signal a potential bottom in the S&P if this really starts to retreat on a trend basis. So that is potentially on the table, but I want to wait until after Wednesday to see how things jumble after that. Then the 2-year, has it topped? We're not quite sure. It was actually up a bit on Tuesday. The small caps, we're waiting for some kind of a thrust with that red line there, but it's not really doing much. And sometimes that will thrust up a day or 2 or 3 before the S&P gives a nice thrust up, but we're not seeing that yet. So what's our outlook? The technicals are negative, but they're bouncing from an oversold condition. The markets are still trendless and in an intermediate term range. The battle goes back and forth between growth and value. We have the FOMC coming out. Economic reports, the ADP employment change will be coming out with the ISM non-manufacturing index, the trade balance, and then every week we get the MBA mortgage applications index. Geopolitical events, Russia, Ukraine. Ugly, terrible, but not having a real impact on the markets right now unless something big happens. China with the lockdowns and what's that going to do to the supply chain, that's kind of part of the scenario. Inflation and interest rates, that's what we're focused on, at least right now in the short term. Oil could start gyrating around. Earnings, Fed speak, which will come out after they adjourn the meeting, as well as this longer term potential problem that could be developing with Japan. So our scenarios, down, which is where we're at right now. We're just bouncing right now. Rising interest rates and inflation fears, that can keep the market going down. Earnings, any kind of Fed speak that the markets don't like. The technicals, they are negative, but short term and even a little bit intermediate term oversold, so we're bouncing a little bit from that. What can make things go up? The short and intermediate term oversold bounce that we've been seeing, maybe that will continue. Those possible positive scenarios could start coming together. The technicals, well, they're pretty negative right now, but with another solid up day, that could show some more improvement. Then the sell the rumor, buy the news. I actually heard somebody talking about this after I brought this up in yesterday's video. The markets have been going down ahead of the FOMC meeting. Once the announcement is made, perhaps we're going to sell the rumor and then buy the news when it actually breaks. That could potentially push prices higher. Sideways, we're above 20 right now, so we're not in a sideways trend currently. So our conclusion is the S&P is negative, short-term negative and bouncing from oversold. Same thing with the intermediate, bouncing from oversold. And long-term, we're negative because we're below the 200-day simple moving average. So thank you very much. I appreciate you putting up with my bad animation sequences, and I'll prepare the next video after Wednesday's session.